I'm Karl Kyler, your San Diego Realtor, and in this Market Matters video, I'm covering the April numbers. I do this every month for you so you can understand exactly what happened in the month after, and we can see where the trends are really taking us in the real estate market. Now, if you haven't liked and subscribed yet, be sure to do so now. And if you're thinking of buying or selling and are interested in working with me, my contact info is in the description below. Give me a call. Let's talk about how we can help you make your next move. To kick things off, we had a 4.3% increase in closed sales. This is really good for us. Though it's seasonal, it is a break in trend. Check this out. In March, we had a negative 8.4 decrease in sales. So March, we had an increase, and months prior, we had this increase in inventory, but the sales, the number of closed sales wasn't keeping up, or much less even going in that same direction. But now we have an increase in inventory and a increase in closed number sales. Now, between the two, they're still radically off from one another, but they're in the same direction, which is important. Now, the median sales price, if you watched any of my videos, I hate using this number, but because it's referenced here and it's a major metric used across the board by most people, we have a negative decline. At 0.2%, honestly, I'm not paying much attention. I'm not giving this much value. Essentially, what I'm seeing is values stayed the same. And the number of homes for sale, it's up almost 41%, practically 41%, 40.7. This is pretty consistent. We've been seeing like 38 to 42, 43% over the last few months. So what we're seeing is that this growth in inventory, this trend is just consistent. Where it would have been concern is, say we saw a 20% growth in inventory, then the next month a 30%, then a 40, then a 50, then a 60. That would tell us that the direction the market is going, there could be a shift, an impending shift in the horizon. But the fact that it's consistent, I'm not very concerned yet. All right, now in the past videos like this, what I've done is I've gone into the actual numbers, like 2,134 new listings in the detached sector. I'm not gonna do that. I honestly think it drags the video out a little bit too far, but let me know your thoughts. If you've watched these videos in the past and you like the numbers, then let me know. I'll continue doing the numbers, but I'm gonna mix it up this month for the April review. I'm just gonna go over to the percentages. I think that's really what's important here. At the very end, I'll give you a little bit more insight into the context, like what these numbers mean, not just the percentages. Let's dive into the detached side of the market. New listings up 5.3%. Now this is radically different from what we saw in March. As you can see here, 13.3% increase in new listings in March on the detached sector. Now in April, 5.3%, that's a radical shift. If anything, I would have expected maybe like 10 to 11%, but here's the trend that you really wanna see. January, we were up 22.6. February, 18.1. March, 13.3. April, 5.3. So this is telling me, look at, we're 4 months of a trend of diminishing number of new listings coming to the market. Here's what that means. It means that if you're looking in the detached sector, you're looking for a standalone home, a single family home with no shared walls, the amount of inventory available for you is diminishing. If the inventory is diminishing, then that means you're gonna get more competition. Competition means values are gonna hold at the very least or climb. There are some factors as to how much it can climb, affordability being the main one right now. And it means that even if, let's say that price doesn't incline or grow as much, we can suspect that there's gonna be less negotiating power in favor of the buyer. So where they may not have to be as aggressive on price, they may have to give up other conditions. And honestly, this is kind of what I'm seeing. The sellers are not driving and pushing price as much, but they are still being very aggressive with contingency periods and inspection timelines, and also like deposits. They're wanting 3% down in most cases, which is not a big deal. I know how to protect my clients. I can get that deposit back if we back out, or that tipping point, right? But these are still the things that the sellers are being very aggressive with, where they're not being as aggressive on price. Now, if we jump to the attached side of the sector, we're seeing some good news, but not quite an establishing of a trend. So in January, we're up 26%, February up 22%, March up 31%. Then April comes around and we're up only 13%. So 31 to 13% growth in the attached sector in new listings. Now, our attached inventory is pretty high, I would say, in comparison to how it has been and in comparison to the detached market. But I'm curious what May will look like, because typically we start having homes come to market after Super Bowl, and they tend to continue to grow into the summer months, right? So a lot of families are trying to get their homes to the market, trying to get them sold, trying to get into a property before kids start school, so they're settled before like August, September. And then once we hit that those fall months, that's when it kind of like, you'll see the curve kind of just peak and then start to go down into December. So what will be really important here is to see if this is a trend, right? It's been kind of teetering between 20-ish%, like 31% was the high last month, but it's kind of been in that 20 to 30% sector. But now that we're below 13, it kind of gives me an idea of like, kind of makes me wonder where's the attached market going? Are we gonna see the same similar direction as the detached side of the market as well? Next, let's look at pending sales. Detached side of the market for the month of April. Small trend. Similar to what we're seeing in the new listings coming to market. So January, we were down 3.4%. Then February, we were up 1.5%. March, we were up 2%. April, 2.2%. So we have this incline over the last 4 months, but that incline is pretty minimal. It's nothing in comparison to the number of homes coming to market in the detached sector, but it's still showing that as we're having more inventory to the market, more buyers are buying more homes. Let's look at the attached side of the market. Big upset in the month of April. We had some growth. Just January, we're almost negative 10%. Then we went negative 2%. Then we were barely over 1% or just almost at 1% in March. Then boom, month of April, down almost 8%. I feel like the attached side of the market is kind of like a pinball machine right now. It's just like boom, 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 boom. Positive, negative, 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 positive, 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 positive. And the numbers are erratic. That's it for pending sales. Now let's jump into the closed sale data. Similar trend showing up for the detached sector. Here is where we see a little bit of a difference in trend for sales on the detached side of the market. So in January, we were up 7%, then we went down 4%, then again, we were down almost 6% in March. Now we're up 6%, 6.3 to be exact, right? Here's some of the data I want you to look at as kind of a positive. So in January, we had 941 sales. Then in February, we had 1,036. March, we had 1,173. Then in April, we had 1,425. So now we see this trend of improving number of sales, right? This is very seasonal and very expected. We want to continue to see that growth. Now, hopefully the year over year trend will start to show positive more frequently, and then that will kind of veer us into the direction of a balanced market, right? So if we see that number drop off while inventory is going up, now we know that we're approaching a market that could possibly shift, not flip, shift. Shifting into the attached side of the market, pinball data as well. January, we saw almost negative 1%. February, we saw over negative 12%. Then we saw negative 8% in March, my apologies. And then in April, positive 0.7%, which I think is, you can just probably round it up to positive 1%. Hopefully this is a positive trend that will continue to show up over the upcoming months, where more buyers are going to move their way into the attached sector. Moving on to median sales price, a metric I hate to cover, but we're gonna go over it. Negative 1.4% on the detached sector for April, and negative 0.7% on the attached sector in April. So that price comes out to $1,075,000 for attached homes. Median price for detached is $675, and that's how it's been for the last 3 months. Average sales price, which I think is a better reflection of what we're seeing in the market. For the month of April, detached is down 3.2%. Average sales price is $1,417,000 and some change. On the attached side, it's $842,000, up 2.2%. So on the attached side, we have 2 months of positive data for the average price going up on the attached sector. That could be a trend. If we see that happen over the next 3 to 4 months, then we know that we have a positive trend and values might be continuing to climb on that side of the market. As for the detached side, having a negative number, that's a really, really odd number right there, especially considering we've had positive growth, positive numbers for the prior 12 months, all the way back to May. So to see April come back at negative 3.2%, I'm having a hard time understanding that number. So I'd like to see how May shows up, and then that'll kind of give us more insight as to like what may be happening with the market. It could have just been a fluke month. Days on market is always a valuable metric to assess the direction the market's going, right? So we've been sitting around 30-ish days or the upper 20 days of the market for the last few years. I think that San Diego County has acclimated to that. Now, if you look at the data, January, 44 days, February 36, March 33, April 32, that number is coming down. The attached side of the market is showing a very similar trend. So January 46, then 41, 39, and 33 days. So our market time for properties is going down, which tells us that buyers are getting them sooner rather than later. If we continue to see this trend, which I anticipate probably up until maybe August, we'll see that market time come down, then we'll probably see it come back. And that's a seasonal trend. So bottom line, very, very typical seasonal trend. If we saw that shift, then we would be able to interpret the market doing something different. We don't need to go down that rabbit hole for that. Inventory of homes on the market. Very, very, very important metric for you to understand and be mindful of. Detached sector, 3,231 homes in the entire county of San Diego, 3,233 homes. That's it, folks. What that tells you is that if you're looking in a very, very specific neighborhood, let's say Blossom Valley of El Cajon or Eucalyptus Hills of Lakeside or South Carlsbad, La Costa, or if you want to be in a small coastal community, Solana Beach, OB, right? If you're going very, very concise with a specific neighborhood, this number is telling you that there might not be very many options in there. You will be lucky to find 2, 3, maybe 4 that fit all of your criteria. So if you're looking for a 3-bedroom, or heaven forbid, you're looking for a 4-bedroom with 3 baths or 4 baths, right? You might not have very much opportunity there to find or to pick among a big pool of properties. Jumping over to the attached side of the market, 2,344 homes. Again, not a lot there to pick from. But here is where we want to really zone in on the data. For both the detached and attached, we have seen growth from January, February, March. Then April, we now see not as much growth. The same thing is happening on the attached side also. They were up 70, almost 71% in March. Now in April, they're up 60.5%. Now that's a big number, right? Up 60%, but that trend is coming down. So this is very, very interesting. You would think, and typically what happens seasonally is that inventory number continues to grow. We shouldn't see it diminishing right now, but as the May numbers and even June numbers come out, we'll be able to see really what this number is. Could it be a fluke? I think we saw a fluke on the detached average sales number. It could be a fluke, but the fact that it's showing up on both sectors, detached and attached, I don't think it is. I think that this is a start of a trend. Now for the total market overview, there's some key numbers here. I got the data on the screen that you can look at. You can pause right here if you want to like really look at all the numbers. I'm not going to cover them all, but here's some key numbers I want you to look at. New listings up 8.2%. We had 3,420 new homes come to market in the month of April. Now, if we move down to homes for sale, we're up 40.7%. That's 5,575. That's all the homes that we have for sale in the entire county of San Diego. 5,575 homes for sale. 2,000 of them went into pending and 2,100 of them, or just over, closed escrow. So you can see that we're moving almost half of the market's inventory month over month. All right, that's it for this week's San Diego Market Matters. I hope that my take on the data this month, though it was a little different, I didn't go micro into the numbers as much. I hope that it was still valuable. If you have any thoughts, questions, or concerns, don't hesitate to reach out. Be sure to check out my other content, which I'm gonna have pop up in either of these corners here. As always, I'm Karl Kyler, your San Diego Realtor. I'll see you next video.